Hey, good afternoon, everybody. Chris Lester here. And we have a special guest with us today. If you have been on here before, every week we do a chat just to stay connected with the public, with clients. I have a bunch of advisors, the Eagle team across the country, and we're a collective consciousness, right? So we all work together, and this is a community effort to have like-minded advisors bring value to the public in expressing ideas that you can actually get value from and take away. If you have a question, then reach out to us. Our staff will be happy to circle back with you with answers. But if you were invited here by another advisor, then we would ask you to reach out to that advisor directly with your questions. You'll see up here on the screen, these are some of my credentials, but notice the word SMART, Debt Free for Life, and the Smart Advisor Network. So I belong to a network, and our special guest, who I'm going to introduce here in a second, we belong to a network of advisors, and SMART stands for the Strategic Movement Around Retirement Taxation. So I thought it a good idea, instead of me sitting up here today, I'm going to introduce you to Nancy. Nancy is an associate and colleague of mine. She is absolutely brilliant. And when I say brilliant, I mean she lives in Merritt Island, which is down in Florida, right by Cape Canaveral. And she works with engineers at NASA. She literally works with rocket scientists. And she, as a financial advisor, and philosophically, we're wired the same way. We understand that the problems that people are facing as they enter into retirement, and really it's surrounded around three items. A, taxation, rising taxes and the risk of that. B, debt. How do we use math to accelerate getting out of debt? And lastly, C, income, making sure that we have enough money to live on for the rest of our lives. So I've invited Nancy today to take us through these conversations today. And today's topic is just going to be around how do we become debt-free, not just debt-free, but debt-free for life. So Nancy, without further ado, hopefully I did you justice there, but it's my honor and privilege to introduce you to Nancy Brunetti. And without further ado, take it away.
Well, thank you for that generous introduction. I must say that it is an honor to be working with you and your team and your clients as well, because when you have like-minded people who are really focused on helping people improve their situation by eliminating debt and reducing their taxes and create more spendable income, the value proposition is just so clear. And, to be wired that way with like-minded other advisors really makes me happy and gives me a lot of satisfaction in my career. So let's start today and talk about debt and this idea of our program of Debt Free for Life. So I appreciate you taking the time to let me share that with you. You probably already know this, but if you have debt, it is truly hurting your ability to accumulate wealth. It's standing in the way of having true financial freedom. And financial freedom is that idea of not worrying about all these things that contribute to our overall stress and our financial situation. So we know that Albert Einstein said years ago, compound interest is the eighth wonder of the world. And what people don't realize is that there was kind of an addendum to that phrase that says, he who understands it earns it, and he who doesn't pays it. And we don't want to be in the situation of one that paying interest, we want to be earning interest. So I want you to understand how powerful compound interest really is. And when it comes to your money, this is a very, very powerful force. So either compound interest is either going to help you or hurt you. It can help you accumulate wealth, or it's going to hurt you when you're paying for somebody else's wealth. And I've got news for you. If you're the one in debt, guess which one applies to you? We want compound interest to start working for you instead of working for other people. Now, let me say, lost interest is not like fine wine. It simply doesn't get better with time. And the longer you let it hang around, unlike wine, the more it hurts you when it comes to accumulating your cash assets. So if you're in debt, you already probably know you have a problem. And here's why. If this check represents the amount of money you earn each month, now you may make more or you may make less, but the concept here is the same. Just want to show you as an example. Before we get that check, we have deductions, things like federal and state taxes, your health insurance, and if you're lucky, you may be contributing to that 401k. And what's left over is our net earnings. This is the amount of money we actually get to take home and use. Now, those net earnings are what we use to pay for our lifestyle, and it includes things like your rent, your mortgage, the car payments, your living expenses, eating, and of course, whatever debt obligations you're responsible for paying. Now, unfortunately, for most of us, there's not enough money left at the end of those net earnings to accumulate the kind of cash we really want to for ourselves, for our future, for our legacy, for our children. Now, our gross earnings, our gross income tells us we have nice things. We have the fancy car, the nice purse, we live in a nice neighborhood, in a nice house. But our net income tells a different story. Now, that car may not be as nice as we wanted it to be, and we may not have purchased the purse or other items that we wanted, and the house you're living in may not be your dream home. It may not be in the neighborhood that you wanted or near your family and friends. But we've been conditioned to this, so we don't really have a problem with it, because what we do is we take out a car loan to buy that nicer car, or we buy the things we want by using our credit card, or we get a mortgage to pay for our house or a nicer house, a bigger house, or in a better neighborhood. And this is how the death trap starts, because everything becomes based upon monthly payments rather than what we can actually afford to pay in cash. But just like you, most Americans have this same reality. Over at the Bureau of Labor Statistics, they put together this study that says the average American household income gets split up into taxes and lifestyle and savings and debt. What we found out, or what they found out, was that 25 cents of every dollar you've ever earned, and that's money you've earned before you retire, money you have earned in your retirement, but 25% of the money you've ever earned in your lifetime goes to paying for debt. Now, that may not be your number specifically, but it was surprising to know from the Bureau of Labor Statistics that the average American has that much debt that they're paying for on a regular basis. And that's where a big portion of your net income may be going to. So let's look at the difference. When we teach you how to reduce or eliminate your effective interest costs, there's a significant swing in your favor to help increase your spendable income both now and in the future. Our objective is to reduce debt and therefore have more money for savings. So let's look at this. This is what most Americans experience every single month. The money they owe to the bankers and the credit card companies and financial institutions and lenders is significantly higher than the money they pay to themselves or the money that they save. And unfortunately, most Americans don't have a regular savings plan to help them accumulate the cash that they want to have to buy those nice things, either now or in retirement. So what we want to do is teach you to spin the tables on compound interest in your favor instead of for the banks and the financial institutions. What if we were able to move your money more to a savings plan and less into what you owe? What does that look like for your specific situation? So I want to show you quickly here an example of some clients that came into my office a little while ago, and they recognized they had a problem. They actually came in and said, we have a problem. They just didn't like the idea that they had too much debt. And it wasn't that they couldn't afford the monthly payment. They just didn't like the fact that they felt overwhelmed with the amount of debt and that so much of their net paycheck was going to pay for their debt. They recognized that their money was compounding for banks and lending institutions and credit card companies, but not compounding for them. They like to have nice things, but they didn't have the cash to always pay for those things, but they did have the resources to make those monthly payments. And that's what became their default option, was to always have the monthly payments to determine how much they could afford. And they recognized that this trap was something that continued to hurt them and continued to haunt them when they looked at their overall financial future. So their debt situation looked like this. They had about $3,900 in credit card payments. They had student loans of just over $31,000. Their mortgage was just over $184,000. So in total, they owed $219,000. Now, I have found that this is pretty typical for the people that we're working with. They don't have excessive debt. They're not abusing it. They can afford to make their monthly payments. But when looked at their monthly payments, the real issue was this, that 35.33% was their effective monthly interest cost. That means that every dollar that they paid for their debt, every dollar sent out of their household was going to pay interest, not eliminate their debt. And when they stay on their current plan, it was going to take them 26 years to eliminate that debt. So let's talk about this idea of effective interest cost. And the math's pretty simple here on what an effective interest cost is. It's your monthly interest divided by those minimum monthly payments. And you see it all the time on your credit card bills. What's the minimum monthly payment? What are you actually paying each month? So in their case, the monthly interest that they were paying was $915. The total payments they were making toward their debt each month was $2,590. So the math here is pretty simple. We take the $915 divided by the $2,590, and that's how we know that 35.33 cents of every dollar they were paying was going to compound interest for someone else. Now, the real problem here is exactly that. And I keep saying it, but I want to say it again, that 35.33 cents of every dollar in their effective interest cost was paying somebody else's interest, was compounding for somebody else's benefit and not compounding for them. So when we look at people's debt, they said to me, well, here's the real question. Where in the world were they currently earning a rate of 35.33% on their investment? Not on their savings accounts, certainly, or their retirement plans, or 401ks, or anywhere else. The reality is you can't out-earn your debt. If you're spending 35% of your money on debt interest payments, none of your investments are likely to be earning 35%. They weren't earning that kind of money. So the secret here is really simple. When money compounds for you, it is always, always, always better than when money compounds for someone else. And here's why. When you give someone else a dollar, when they give you your dollar specifically, you forever lose the ability to earn compound interest on that dollar in the future. That dollar is gone. You cannot earn any money on money that you gave away to somebody else. So when I look back at Max and Megan, we're very excited about what we were able to do and help them with their situation. They became 100% debt-free by following a simple program. One, they committed to the Debt-Free for Life action plan that we can put together for them. When they learned the math on how compounding for them was better than compounding for banks and other financial institutions, and that when they were done, they eliminated that $219,472 worth of debt. And the really great part about this for them, the good news, was that instead of being in debt for 26 years, they were out of debt in less than 8 years, spending the same amount of money that they were spending today. They were able to eliminate their debt plan in 8 years without taking any more money out of their pocket, but by simply making the dollars that they had work for them more efficiently. Now, the especially good news is that not only did they pay off over $219,000 in debt in 8 years and were 100% debt-free, at the same time, they were able to accumulate over $149,000 in cash assets that they were able to use for whatever future purchases they had. Next time they needed to buy a car or that purse or that next house, they were able to do that. So what if this were your story? If you have debt and you're looking for ways to eliminate it by making your money more efficient. This is exactly what Chris, the advisors on the Eagle team, and whoever else asked you to be on this call today, this is what they specialize in, is the idea of making your money more efficient, making you debt-free without spending any more money than you're currently spending today. So, Chris, that's really what I wanted to share with people today. And let me know if you have any comments or questions. I'll be happy to be able to address them for you.
Nancy, wonderful job. Just to hear you articulate one of the case studies with your client and to be able to present this type of information, people don't know what's possible until they are ready to learn or hear. It really boils down to a strategy, to map, to having a guide show you how to build this. So, if you're on this call today, and whether you've been invited by one of our advisors or you're somebody that we've reached out to you, and maybe this applies to you, or maybe you're on the call and you say, hey, I don't have any debt, I'm good. Well, who do you know? Who in your family or your circle of close relatives or people that you consider friends that should take advantage of this information? I'm almost 30 years in the business. Nancy's got almost 30 years in the business. Between us and all the folks on this call, there are things that you can and should be doing to not just be debt-free, but debt-free for life. So Nancy, I really want to thank you. I mean, if you have any questions, please email us, call us, do whatever you need to do to say, hey, how do I find out how this might look for me? Because we can show you how to get a free report or to design a strategy that would be of benefit for you. So Nancy, thank you very much. Guys, once again, don't keep us a secret. We'll see you on the call next week, and have a great day.